I'm a 23-year-old trader and finance student on my way to becoming a chartered investment manager, and I'm here to help you navigate the markets. So what's going on with our boy George Soros? Looking at the 13F filing of Soros Fund Management, we can see that NIO is in the top 20 holdings of his funds in the first quarter of 2023. In the next coming months, we should get some new updates about their positioning. This is why I like to track 13F filing, because it can give you good trading ideas. If you had bought NIO in the past months following Soros Fund, you would have made a killing. So what's this new excitement about NIO all of a sudden? The stock is up a whopping 30% since last month. What is driving this price action? At the moment, not much. Recently, we had NIO report June deliveries, which were decent. They were not bad, they were actually quite good, especially for what's going on right now in the economy in China. Earning is also not that bad, it's okay, it's not great, it's not phenomenal, there's nothing much really special going on. Guidance was slightly down for the next quarters of this year, probably due to the economy in China. Nonetheless, never forget that narrative always follows price action. Personally, I would not be surprised if we see some new bullish catalysts hit the stock in the next coming months, and some potential good news about China economy rebounding. So now let's dive in the chart. Looking at the probabilities, NIO is now at the second standard deviation of the daily range on the purple line right here. As you can see right here, we went to the second standard deviation a couple of weeks ago, then we got rejected. We went right back to the reversal of the means, which is the green line in the middle, which is very typical of stocks. At the moment, we went right back to the second standard deviation, which basically means that there is a 95% probability that we do not go higher and only a 5% probability that we do go higher to the red line, which is the third standard deviation, which is a possibility, or we do get rejected again for a second time and go right back to the reversal of the means. Personally, I think NIO is a buying opportunity below $10 a share for the long term. Looking at the seasonality data for NIO, we can see that June and July is very bullish. We can also see a lot of accumulation going on in the ADL, which is very positive. The only issue is that right now we are at the second standard deviation, which is really not a good place to buy long term in my humble opinion. This is how I trade. I trade using probabilities. I never go against the probabilities, and this is why I have a very good win rate when it comes to trading the market. Also, don't forget that NIO is a sympathy play of Tesla. NIO is following into the footstep of Tesla's monstrous rally that we had for the past months, which I did call on this channel. You can go check my short video called A+ Swing Trading Setup, Tesla. Now we need to ask ourselves, what's next for Tesla? Personally, I've been vocal about a major pullback. Based on probabilities, I called this stop on Tesla because we were at the second standard deviation and ended up being right. Then we did go down, but then Tesla being Tesla decided to rip right back up for one last top, and then again went to the second standard deviation and got rejected. And again, my PT has not changed. It is still the green line, which is the reversal of the means in the middle. Brief recap, despite this move to the upside that we had, the probabilities have not changed. Still expecting Tesla to go back to the reversal of the mean. The only thing that could make Tesla blow through all these probabilities, which could happen, obviously nothing is impossible in the markets, and Tesla is probably one of the only type of stock in the market that can actually blow through probabilities, would be a blowout quarter, which is the consensus on Wall Street after record EV sales numbers. This would also be a bullish catalyst for NIO stock, especially if we see a big rebound in the EV shares in China. Bigger picture, NIO has room to the 23 Fibonacci, which is in the ballpark of $21, which would be basically a double of the price where it's at right now. It would have to clear this first resistance right here, which is about $14. So Actually, the first PT would be in the ballpark of $14, which is very doable. I do expect a pullback because of the probabilities right now on the short to medium term on the daily time frame. But bigger picture, NIO does have room to $14 and then $21. Obviously, if it squeezes, it could go back afterwards to $30 in this ballpark, which would be the 38 Fibonacci. Bigger picture, stocks do tend to revert to their mean, which typically tends to be the 50% retracement, which would be in the $37 ballpark. But the problem is that I do not believe that the fundamentals of NIO would catch up to those levels, but I do believe that the fundamentals of NIO could catch up to $14 and $21 easily. I do believe that is probably the fair value of this stock, bigger picture, understanding that Chinese stock always have a discount because of the political tension going on in that specific country. All right, so that was it. Thanks for watching. I hope you enjoyed. I hope it gave you some insights. Have a good one, stay blessed, and see you in the next video.